Lululemon. And this has been a very popular company for years, but they seem to be struggling a little bit. They're in the industry of apparel and retail. Their symbol is LULU. 5.5% short. That's not too bad. 97% institutional owned. They've got now a reasonable PE. I know there was a time they had a very high PE. It's now 16.3, still not as good as the industry at 13.4. Price of sales is 2.7 versus 2.1. Price to book value is 6.7 versus 6.3. Price to cash flow 14.5, better than the industry at 16.1. They do have a PEG ratio of 3.4, nothing for the industry. Now, over the last year, their earnings, well, they look like they're okay. They were up 18% above the industry at 12.1. Sales over last year up 9.4% versus 7.7, so did well there. The 5-year growth rate on the earnings per share going forward is 5.5%. The industry is a negative 7.9. They still do not pay a dividend. They're still, I guess, considered a growth company. The balance sheet, current ratio, very good, 2.3 versus 1.8. Not much debt. Debt to equity is 0.4 versus 0.8 for the industry, so that's a positive. Net profit margin is 16.8 versus 8.3. And I know those pants and clothes are pretty expensive. They're making about 17 cents on every dollar that you get there. And wow, the return on equity is 42.1 versus 32.3. So that's pretty good. Their cash flow, free cash flow, was $1.3 billion versus $3.8 billion for the industry. What do you got going forward here, Chase?
Yeah, I was going to say, I mean, the stock actually pulled back pretty drastically after earnings last week. It looks like it was down about 20% as the outlook is actually what missed expectations. And, I mean, this has caused the stock to be now down about 37% year to date.
Oh, wow.
I was kind of surprised by this. We know it hasn't performed well, but the 5-year return now negative 21%.
That's a surprise, too, because I thought they've done well over that time frame.
Yeah, and obviously not. But the 10-year return up 274%. So the interesting thing is that means if you bought this stock 10 years ago, the first 5 years were great, but now the last 5 years have been terrible. What's even worse is if you saw somebody, one of your friends bought it 10 years ago, and they had done so well after 5 years that then you bought it. Well, now obviously that
happens a lot. People, I've done so well in this. Yeah, you should buy it. Like, yeah, you paid a much lower price than I did, and that can hurt your investment performance.
Yeah, and what we're looking at here is now that current price, 239.11 compares to a 52-week range. The low 226.01 and the high here $423.32. This company now finally has a target sell price that is actually above the current price. And I don't know if I've ever looked at this company and having that be an option. Still not a buy yet, but the estimated earnings per share for January 2027, $15.77, gives you a target sell at $261.78. Forward PE still about 15.6-ish, 15.5-ish. So it's still, again, expensive. We like to buy things around 12 times earnings. And frankly, I wouldn't buy this company even though it's below our target sell price because the growth is terrible. I would need the stock definitely around 10, 12 times earnings. Earnings are estimated growth this year about 1%, next year by about 6%. Sales, they're not doing much either. I'm going to say about mid-single digit growth is what the expectation is. You're not getting much growth and you're getting, again, not a cheap multiple for buying the stock.
And I do see the last 9 days that the estimates did come down quite a bit. Looks like they fell, well, not quite a bit, I guess by about 6.5%. So those estimates are coming down, will continue to decline. And I got to ask the obvious question. Lululemon was hot a few years ago. They did, probably about 5-6 years ago, did great. How many pairs of Lululemon pants can a woman own? That's a dangerous question.
Wow, totally off track here, but I just asked ChatGPT. I was curious because one of the other things I read was the fact that they're going to have to mitigate the impact of higher tariffs. Approximately, this is what ChatGPT is telling me, approximately 67% of Lululemon's products are manufactured in China, with the remaining 33% produced in countries such as U.S., Canada, Israel, Taiwan, Indonesia, and India. So that is going to be a problem for them if tariffs remain an issue. But back to your question about leggings.
I thought you were avoiding the question. You don't want to go there.
No, I mean, my concern is not even how many leggings can somebody own. That Lululemon also does men's clothing. I have a few friends that said super comfortable, great shorts, great shirts.
I don't think they have much sales from. When I walk by there, I don't go in there. I don't see many men in there. There's mostly women. But you think we can find that real quick? Is that what you're looking at there?
I'm going to see. I mean, we'll see.
I still say it's like a woman's brand. I'm old school, but
I mean, my point was going to be that there's now so much more competition. You have Viore, which has really taken off, and they're not a public company, but even Jim Cramer, after I saw this, and I think they actually started here in Carlsbad, if I'm not mistaken. Viore did.
Oh, really?
And had already made it all the way over to New York, where Jim Cramer's talking about it. So I mean, that is true competition for them. Alo Yoga, my wife really likes them as a brand. I mean, there's just been so much in this athleisure space that, back to your question, how many Lululemon leggings can you own? Well, how many leggings can you own? There's so many different options is the big problem.
I think my wife has almost every option. I mean, I go with those new? Yeah. So, but as a whole, I'm just wondering if it's kind of surpassed it. That's why they probably brought the men's products, because they had to expand. You can't have women keep growing that, so they're trying to get the men involved as well. But it's just, they had such, I think, a hit with those leggings years ago that the fad seems to be changing.
Yeah, and it looks like about 23%, which is higher than I thought it would be, of the total revenue in fiscal year 2023 came from men.
Yeah, I am surprised on that.
Yeah. And the issue is, as you said, you have to keep growing. And I'm going to guess this stock years ago was trading around 40 times earnings, 50 times earnings, something crazy like that. You have to keep looking for growth. And all of a sudden you start running out of areas to grow. That growth rate falls like we saw here. Then the stock plummets because that valuation contracts. Even though they're still growing earnings, it's at a much slower rate. So you can't justify that higher multiple. And you see that the stock plummets. So even with that lower price compared to the target sell price, I would stay away from this, because I mean, we didn't bring up Nike and the traditional, I'm going to say, legacy athletic companies. I mean, they have other competitors to Lululemon as well.
So they got a lot of competitors. They've got perhaps saturated market, and then they have the China issue with the tariffs.
And I don't know where their growth would come from now.
Yeah.
I think it's going to be difficult. If this stock traded at a multiple of, let's say, 10 to 12 times, I think this would be a very intriguing company, because I don't think it's going to go to zero, but still remains expensive from my viewpoint.
Yeah, I don't. Big factors of growth, and I think they will. Obviously, leggings aren't going away, but you're not going to have that type of growth they had when they were the only legging company on the street. And I think they're the ones that kind of came out with it. They started the fad years ago.
Yeah, I mean, I don't know if leggings were around before that, but I think they definitely revolutionized it to really kind of put it on the map. And I mean, they definitely did a great job, and it's a great company many people love. It was just way too expensive of a stock for many years.
Yeah, and that's why we said don't buy it. And if you bought it, you're down, what was it, 20% or something over 5 years?
This year down 30, 5 years down 20. Right, if you would have not listened to us 10 years ago and bought it, you're still up about 270, but you should have sold it 5 years ago.
There we go.